I'd love to hear your thoughts ahead of all of this testimony, just in terms of who you think got ripped off here, if anybody.
Well, I think you have a lot of consumers who got ripped off. $20 or so, and it went to 400. They kept buying, and now it's back down to around 40. And so you have a lot of people who, as you know, Becky, haven't played options before. There's a gamification of this. Got in on it, followed some people posting on Reddit, and went for it, and now lost a lot of money. And people took out $20,000 loans who've never ever traded before. So the question is, for me, among other questions, is was this just a pump and dump scheme? And was there collusion that went on Reddit? What did Robinhood know, and when? Should they have any responsibility for who's on their site and what they're posting about and on Reddit? And should they be responsible for that at all? And of course, there's the separate Citadel question. But really, this is about, for us, protecting consumers. Should the SEC do its job here? And I think it should, and make sure that there's strong oversight about what happened between people who were posting and what they were buying and selling. And I think there's investigations. We've got to get to the bottom of that. But for us, I think there's real consumer protection questions.
Josh, that's where I think it gets into a little bit of tricky terrain. I agree with you. I don't like the gamification of the system. I don't like it looking like a casino or anything else that happens with those things. I definitely don't like the idea that there could have been a pump or dump scheme, that the people were saying one thing on Reddit and then doing another. That concerns me. But I also think that you walk a fine line here. If you start talking about making sure you are protecting investors, a lot of times that means telling them that they're not smart enough to figure this out, that they haven't done things the right way, and that we're going to protect them so they don't get to do the same things that more sophisticated investors are doing. How do you make sure you protect investors, retail investors, without being paternalistic?
No, that's an excellent point, and I agree with you, which is why you have to look at making sure that there are certain disclosures and education that go up front, so that if you're going on to Robinhood and you're trading, you understand exactly the soup you can get into and understand how the system works. And I think there has to be some disclosure there. If you're posting on Reddit, does Reddit have any responsibility, just like Facebook does, to know who's on it and what they're posting about? And they apparently do some screening, so to make sure that the people there who are on it know what they're talking about and aren't involved in some scheme. What is their responsibility level? That, to me, is all about protecting consumers, but of course letting consumers trade if they of course seek to, and I think that's up to them. For me, it's just about making sure the information is out there. And then if there is a pump and dump scheme, we have the SEC, we have regulatory bodies. Obviously, there's self-regulation that goes on as well. To me, it's very important that those agencies do their job to make sure that there wasn't a scheme going on here, and that's very important as well. And obviously, we have those pieces in place already, but they've got to do their job.
Shepard Smith here. Thanks for watching CNBC on YouTube.